Hey everyone, welcome back to Corporate Decoder. Today OTEC just filed an 8K revealing new stock issuance, and I am seeing a key move for future funding. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is issuing preferred stock, and while it signals a need for cash, the terms might be surprisingly favorable. Let's dive into what is happening. Ocean Thermal Energy Corp, or OTEC as they call themselves, announced on the 7th of July 2026 that they sold 2 shares of a new type of stock called Series E preferred stock. These weren't sold on a public stock exchange. Instead, they went to 2 private investors. Each share cost a hefty $10,000. Bringing in a total of $20,000 for the company. Now, why is this important? Well, they're saying this sale was exempt from the usual strict rules that require companies to register their stock sales with the government. They're doing this to raise money, to keep their operations running, and to make their financial situation stronger. These preferred shares can be converted into the company's regular common stock later on. To allow for these new shares, OTEC also had to officially create them. They filed a document called a Certificate of Designation with the state of Nevada. This document basically says that OTEC is now allowed to issue up to 150 of these Series E preferred shares. Each preferred share has a face value or liquidation value of $10,000. What is interesting is that these shares come with an 8% annual dividend. This dividend can be paid either in cash or in shares of the company's common stock, which gives them flexibility. Now, here is where it gets really interesting for investors. These preferred shares aren't just going to sit there forever. They are designed to convert into common stock under a few specific conditions. One of the most important triggers for conversion is if OTEC signs a major contract. This could be for generating power from Ocean Thermal Energy, supplying desalinated water, or providing cooling services. This tells us the company is actively trying to secure these kinds of business deals, which are crucial for its long-term success. Another trigger is if the company is bought out by another firm, or if they have a really big public offering of their own stock. When these preferred shares do convert into common stock, the number of shares you get will depend on the company's common stock price. Specifically, it is tied to the average trading price of their common stock over the 10 days before the conversion happens, and then that average price is multiplied by 0.5. This means the conversion price is essentially half of the average market price at the time of conversion. This structure might be designed to offer a bit of a discount to those private investors, encouraging them to convert their preferred shares into common stock. OTEC also has the right to buy back these preferred shares after 2 years, even if they haven't converted yet. This gives the company an option to regain control of these shares if they feel it is financially advantageous to do so. The preferred shares also have limited voting rights, which is typical. They usually only get to vote on really big decisions. Like if the company wants to issue stock that is more senior than these preferred shares, or change the terms of the preferred shares themselves, or if the company is going bankrupt. Looking at the broader picture, OTEC is a small company with a market cap around $2 million and a stock price trading at just 1 cent. They have very few employees, only 2. This new issuance of preferred stock, even though it is a small amount of $20,000, signals a critical need for capital. Companies, at this stage, often rely on these types of private placements to fund their operations while they try to land larger commercial contracts. The fact that the conversion of these preferred shares is tied to landing commercial contracts is the central story here. It shows the company's management is focused on and incentivized to secure the very business deals that will determine OTEC's future. What we're seeing is a company that is still in the early stages trying to get its core business off the ground. They're using preferred stock as a way to raise essential funds while also aligning the interests of early investors with the company's ultimate success. The risk, of course, is that if they don't land those key contracts, these preferred shares may not convert, and the company might struggle to raise further capital. However, the structure of this deal suggests a belief from management and these private investors that those contracts are achievable. The immediate impact is that OTEC has a bit more cash in the bank to pursue its ocean thermal energy conversion goals. My main takeaway is that investors should be watching for news on those crucial commercial agreements, as that will be the true test of OTEC's viability. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. Like, comment, subscribe for more, and join our Discord linked below.